Hello and welcome to our XTB look at the week ahead. Today I want to focus on the Eurozone after we've had some pretty major political disruption coming out of Italy and also a little bit from Spain, and this has had a really big impact on the market. So the obvious place to start is the item 40.cash. So this is the daily chart here. You can see the Italian stock markets took a hammering in recent weeks after it hit its highest level of the year, back up around 24,000 just a few weeks ago. We've seen a decline in excess of 10%, and today we've had a rather ugly open with a large gap lower and also moved down to its lowest level since last July. Now, the reason for this is some political turmoil where we've seen the president essentially block a coalition government between the Five Star Party and the League. Now, what this means is that fresh elections are likely, and why the market is concerned with this is there is some fears that the parties which are anti-establishment by nature could actually stand on more of a Eurosceptic mandate. So if you see here, going back to March when these elections took part, they were obviously inconclusive in terms of their outcome with no clear majority. We had a sharp gap lower of around 2%, fell down to 21,631, but the market then actually found some buyers stepping in and we recovered quite strongly. Price moved back higher, and in these weeks, especially for a lot of April, it looked like this coalition would form, which would actually be fairly Euro positive. In recent weeks since then, however, we've had this big sell-off, and now there's political tensions which have really driven the market even lower once more, and it's looking like we could fall far lower. If we look out onto a weekly time frame, you can see the sort of perspective from a very long term. Just delete these. And you can see that high that we had around 24,500 coincides with the high we had going all the way back to 2009. And the market has failed to break out of this potentially key level, and we could be now back into this large range that we've seen. If we had had a strong push to the upside, it would have been very positive for Italian stocks. We could have moved higher, but we failed to break out. And with this latest news coming out, which is taken as negative for the market, we could actually see quite a bit more downside in the coming days. It's not just Italy that's been affected. This is the D30, the German stock market, and obviously Italy being the third largest economy in the Eurozone, if we do have some negative news out of there, it can impact the whole block. Now, the D30 has been in a strong move higher. Again, look at a very long time frame. This is weekly, going back to 2009. The market has rallied very strongly, but we did get a potential reversal signal last week with a bearish engulfing candlestick. As you can see here, we had this big red candlestick last time out, which engulfed the entirety of the prior week's range. Now, looking a little bit more closer to home and shorter term on a daily time frame, you can see the market here had recovered well. So we had the large sell-off that we saw in global stocks around the end of January throughout the start of February. The market had recovered pretty well, but we have possibly turned lower once more. Now, if we take a fib retracement, run it from these highs, which was the all-time highs at 13,606, take it to those lows we saw back in March, you can see we had a strong break above the 50% at 12,650 around that level, but we have run into resistance around the 78.6. We didn't retrace the full move higher, and we're now back at this 12,650. If we do drop below here, then further declines are possible, possibly taking out 11,700, and we could drop even further. Finally, I just want to look at FX. It's not just stocks that have been impacted by this news, and the euro US dollar, you can see, has been in a decline for several weeks now. We've actually got 1, 2, 3, 4, 5 weeks of declines confirmed, and we're now possibly on course for a 6th week. Why this is important is we're now revisiting this potentially key 115 area, which had acted as resistance for several years. You can see around 2015 and 2016, attempts to break above this level were met with selling, but we did get a decisive break higher last summer, and the market rallied a long way, around 1,000 points above that, up to 125. However, we are now back into this level. It'd be interesting to see if we do get a flip in polarity here and this acts as support after previously acting as resistance. In terms of news this week, there's nothing too major out on the economic front. Obviously, political developments could have a major impact on the market, so keep a close eye on those. But in terms of economic releases, the big one really is Friday at 1:30. We have non-farm payrolls, which are expected to show 185,000 jobs added in the US in the past month, and also average hourly earnings. Keep an eye out on that. That's expected to increase once more to 2.7% year on year from 2.6% previously. Okay, thanks for listening, and best of luck if you're trading these markets this week.